Japanese bubble tea and ice cream brand called Mixue. It started in 1997 and it is growing rapidly. They just did an IPO in Hong Kong and they actually have the most stores, the most locations in the world when it comes to hospitality businesses. So they've got around 45,000, which is more than McDonald's, which is more than Subway, which is more than Burger King, which is more than Domino's, more than Starbucks, more than all of these big players. So it's massive in China. It's massive in Asia, and it's starting to spread in Australia, and it's starting to spread across the world globally. The thing that makes Mixu so special is it's not the best tasting, but it's tastes decently good. But the whole thing is made through China. Like the whole company is vertically integrated, and their goal is to make ice cream and bubble tea at the most affordable price possible. So their mindset is kind of like Costco. You know, like Costco, they're not allowed to mark up their prices by more than 20% from what they purchase at. And often their things are marked up by less than 10%. So that's their mindset, which kept Costco alive and it kept it growing. Is like they're not being greedy. They really care about the customer and they care about affordability and they don't want to rinse the customer. And that, like an example of in the hospitality world of someone that wants to rinse another person is kind of like Starbucks. Starbucks every single year, what they were doing was because they were so popular and seen as like a luxury good in a way, they kept on raising their prices like luxury companies do, which is higher than the inflation rate. So it actually feels more and more expensive over time, which makes sense. You act as a luxury good, you want it to feel more expensive every year, more out of reach. That's how it becomes a luxury good, because not everyone can have it. But it doesn't make sense for something like Starbucks. Starbucks is, in my opinion, not actually a true luxury good. Because, and then we found out what happened. They kept on raising prices past inflation year after year after year after year until there was a turning point. Like they love to do it, like especially the finance guys. They love to do this stuff because it's an easy way to raise in-store sales instantly, right? But eventually, the customer is just going to get fed up with you. You can't keep, and then the coffees, I heard they're like, what, $7? I think they're like $7 US or something. Ridiculous, right? Even in Indonesia, they're $7 Aussie, 7 Australian dollars, 70,000 rupiah. Um, and I think it makes no sense. It's just overpriced sugar water. It doesn't even taste that good. Well, the sugar stuff does taste pretty good, the frappe stuff. But if you're going for a standard latte, it's not that good. I think it is overpriced in my opinion. And then what happened with Starbucks is they kept raising prices. They kept on making more and more uh revenue, more and more, and that led to more and more profit. But eventually, it dropped the same in-store sales because the customers fed up, right? And then the whole company got marked down, the whole stock price fell off a cliff, the CEO got booted out, and they brought in a new CEO, and then the new CEO seems like he's got his head screwed on, and understands what actually the customer wants. You got to, sometimes you don't, it's not about the numbers, man. It's not about, every time the numbers guys come into these companies, hospitality companies especially, they mess it up. They mess it up. You just want to keep it like stick to the basics, man. Costco understands the basics. Model Costco, and I think that's what Mixu or Mishway, depending on how you ever want to pronounce it, they understand it. So the whole thing is vertically integrated. They have the farms, they have the warehouses, they have the logistics system. Like, they're scaling all through China. Everything's shipped from China really efficiently to the rest of Asia. And yeah, no one in the world has the ability to compete on price. I feel like the only way another company will be able to compete on price is if they actually have the same amount of capital. The only way you get the same amount of capital is you create a monstrously sized company. Good luck. Or another company like Macca's and I don't know, KFC and Starbucks, they all do a joint venture together and go to take down Mixu. But good luck getting those three guys to agree on how to, take down these players. And not only that is I feel like with this type of business, you kind of do need like a Chinese mindset. Like to take down these Chinese players, like I feel like the only people who can take these Chinese players down is another Chinese person. Like these Chinese players, honestly, they are frightening. They are frightening business people. Okay. To put it in perspective, in Australia, the number one brand of bubble tea is Gongcha. Gongcha, if I'm correct, they're one of the biggest. I believe they are the biggest. They have like 150 stores, and they started like a decade ago. Okay, 150 stores a decade ago. So what's that? That's like 10 stores a year. 15 stores a year. And probably that's probably their biggest year. 15 stores a year, right? 20 stores a year. Not that much. Okay, not that much. Mixue, when they came to Indonesia, it was 2020. Within, or from 2020 until like I think it was 2020, the start of 2024, might have been the end of 2023. They opened up, I think it was close to 3,000 stores. Okay, 3 years, 3,000 stores, 1,000 stores every single year. How? How? The thing that is crazy is because my mind, I had to change my mind like many people. We're taught from a very young age to think in a linear fashion. That means we've taught to think in terms of one, two, three, four, five, six, and so on. All right. That's how we count. So I believe because we start learning in that way, our brains are then programmed to think in a linear fashion. But then when it comes to learning about investments, it's all about the compound effect, right? And thinking exponential. And then if you start to learn, like, hey, you invest in the S&P 500, 10% sounds really small. But over time, that really snowballs and really compounds into something monstrously large. So I'm always thinking, all right, 10%, that's the gold standard in the S&P 500, really great. A lot of people out there saying it's impossible to beat the S&P 500. And yeah, it's really hard. And that's true. But it is possible and all of that, right? Then you hear like Warren Buffett's average return across his lifetime is 18%. All right, almost double the S&P 500. But in the early days, he was compounding like 50%, I think, for a decade, 50% every single year for a decade. And that's what built his net worth. And then from there, it started to reduce. But because he had such a large sum of money now that the compound rate reduces, it's still huge. Okay. But he really went fast quickly. But even then, 50%, brother. Mixue in Indonesia, 1,000 stores in 1 year. What is the compound rate, man? The compound rate monthly is probably more than 50%. I can't even be bothered doing the math. It's too big. It makes no sense. You know, their mindset, these Chinese people is their mindset. I've spoken to a few of them, and I've got a decent understanding about how they think. Right? Obviously, I don't have the best understanding, but this is what I've learned from them. Okay, they chuck all that shit out. What I just said, they chuck it all out the window. They don't give a fuck about that. Their mindset is like, all right, the way you talk, the way you talk about compound effect, you talk like it's, that's like physics, right? There's gravity, there's all that stuff. Okay, yeah, gravity is gravity. You can't change gravity. Us Chinese, we don't believe in gravity. We're going to defy the laws of physics. That's how these people think. And because then they can believe it, they actually somewhat pull it off. They're crazy, man. Crazy in a good way. So the way they think is like, dude, there's that many people in China. There's that many business people in China. It's a massive, massive population, which means the competition is ruthless. And there's no copyright laws and all that stuff in China. So if you open up a brand, right, it's going to get copied instantly. Like I heard on Joe Rogan, there was a funny story where I think it was Joe Rogan's mate or something. He opened up, I think it was like a food truck of some sort. He opened it up, put it on the street, and it was pumping, right? Because the density of China is insane. Like in Jakarta, I think 1 kilometer radius, we've found out with the boys when we've gone on business trips to check the density, the population density. It's like 1 million people in a kilometer radius sometimes. So China's the same, because there's so many skyscrapers, so many apartments and all that. So imagine you got a little truck on the street. You actually have access to a massive, massive, massive population. So it's easy for it to pump. But the downside of that is, yeah, there's a lot of supply of people, but there's a lot of supply of competition. The next day, what happened? His truck was surrounded by 4 other trucks, all different brands, and they squashed him in, so the customers couldn't even access his truck. That's China. So because there's no copyright laws, and you can do whatever you want. They're the copy kings, man. Their business, the world works in a completely different way. That means their game is different. So you have to think about game theory. Their game is actually different. So you have to be prepared to be copied. So you have to have some sort of edge, right? You have to have some sort of edge, and Like one edge is like you just got to go that extremely fast and hit a critical mass where then you have economies of scale where then you are the, because the bigger you are, the more you can buy of like say sugar. The more you buy of something in bulk, the cheaper you get it, right? Or the more you can produce of it, um, the more efficient you are. If you're running the actual sugar operation yourself, the cheaper it is, and it creates that margin, it creates that opportunity. But then someone's going to copy you and copy that idea, copy how you run your thing, and then they're going to chew away your margin. Right now, that's how Jeff Bezos always says, "Your margin is my opportunity." Amazon is a good example of like the Costco mindset, where they want to reduce the margin for the customer's benefit. All right. Um. So that's what I believe has built that mindset in Mixu. Like you just go unbelievably quick. Now, us at Headstart Capital, I'm the founder of Headstart Capital. We've invested in some shops in Indonesia. We're franchisee owners. We haven't actually invested in the actual stock yet. I would love to, but I actually haven't figured out how, and I haven't had enough time to go, figure out how to invest in it yet. But as investors in the company, obviously, I'm really happy with this because it legitimizes what we are doing, which is, hey, we chose a Ripper brand, man. We chose the good shit. Like when you're an investor and you're a franchisee owner, you have to think like a stock market investor. I don't know why, but the people in the hospitality world, when it comes to standard franchisees, they're not really thinking that intelligently. Like, man, you gotta like imagine, like Warren Buffett says, imagine you only got 10 at bats. You can only swing the bat. It's baseball. You can only swing it 10 times. Um, but you can't strike out, right? So you wait for the perfect ball, and then you swing. You can't strike out. It's not three strikes and you're out. You can just keep on letting these opportunities come by you, and then you wait for the best one. Us, our other co-founder Andy, who is our Indonesian partner, he's Balinese. Because we always wanted to do business in Bali for a very long time, like almost 10 years before we invested into Mixue. He sent us 100 pictures, roughly, different ideas. We said no to all of them until Mixue came up because it was like literally Warren Buffett's strategy. We understood the business. It was hospitality. Hospitality, I understand it very well. Why? Because I got a background in hospitality, running one of the most busy restaurants in Australia, number one Nando's store, doing $100,000 Aussie a week. This is 10 years ago in Chadstone Shopping Centre in Victoria, Melbourne. And then it's like, if you're combining that with my stock market knowledge, branding knowledge, what does the customer want? Like, it's got this really cute snowman. Like, a lot of Aussies and a lot of Westerners, they don't get it. Watch how the customer in Asia reacts to this cute little snowman wobbling around down the street. They love it, right? This logo is worth so much money. It's worth so much money, and that is actually a moat. I don't see how another competitor can easily copy this logo. All right, good luck. A lot of people have tried. They're not as cute. Like, there's something magical about this. It's like the Nike swoosh. The Nike swoosh, I think they got that made for like $50. You can't recreate that with a million, right? You can't recreate that with millions of dollars. It's like sometimes when it comes to art, you just get lucky. Like, you can't force art. Like, you can't force out like an artistic film in a day, right? And sometimes it's just luck. Like sometimes these things, they just come to you and then, wow, I've got it. I feel like, like the logo of Mixer looks like a minimum viable product, an MVP. And it's like, that was like what the Nike swoosh was. It was like an MVP, but it worked. It worked. Now, good luck trying to copy that luck. Good luck. It's not easy. Not easy. So another thing is like the red color, very bright, stands out. Is it the most aesthetic store designs in the world? No, but sometimes the most aesthetic store designs are not the ones that attract the customer the most. You want a lot of red. You want to stand out on the street. You want to think about the walk by test. If you're walking down the road, does it grab your attention? Yes or no? Or is it like, do I miss it because it doesn't get my attention? And then you actually need to get the customer and stick him in the shop and say, hey, do you think this shop looks better than the other shop? Yes or no? And it's not only until you actually force them into the shop. Like that, you've defeated the purpose. It needs the street attention to grab your attention. It's a head turner. That's what you need. Mixue has that as well. Like the big logo stands out, the big red, the simple font, Mixue stands out. Um, so yeah, that is Mixue. Let me think. I think I had a few more things to talk about it. Um, yeah, I think. Sorry, I haven't even got to the main point of the video. So the IPO has legitimized all of this. It's very bullish for our company. It helps us, because it's actually hard because a lot of our investors are Australian foreigners. It's really hard to, educate them on why this is a good investment. Because it's not really a Western thing. Over time, it's going to grow in Australia and it's going to make more sense to everyone. But it's not like an instant fuck yes. Oh, yeah, I get it straight away. Um, now, so we've gotten lucky. The IPO has been very successful. The company's worth 13 billion and all of that. But whenever you invest in something, you can't always think about the positives. You have to also think about all of the negatives as well. So the negatives when it comes to Mixue and these Chinese companies is like, what can go wrong? So what can go wrong with this growth rate? Okay. You've opened up 3,000 stores in Indonesia in 3 years. Now, you're going to break things if you do that. Okay. So, what is like, I like to think on a scale of like all the good stuff that can happen with an investment. And then I go there and I let my mind get there. And then I get out of that. All right. I get out of that quickly. And then I start going down the scale of all the bad things that happen. I start going to the really bad things. And I want to be prepared many, many years in advance. So, if those bad things do happen, I know how to react. Right. One of the bad things that I can see, which potentially, right, might, I don't know, for some reason, I feel like the odds are a lot greater than very small at like 1%. They're actually decently, not not really high, but it's more than 1%. Let's just put it that way. Where if you go really, really fast, the thing that breaks quite easily, in my opinion, is the accounting. It's really hard, I think, to do the accounting 100% accurately at this scale, at this speed. There might be inaccuracies there. Now, I don't believe they will do that on purpose. That is the narrative. And this, as an example, the reason why my mind goes here is because I'm a little bit traumatized by Luckin Coffee. Okay. Luckin Coffee was another Chinese brand which has the same mindset as Mixue, pumping, absolutely pumping, same mindset, just open up stores again and again and again and again and again. Their mindset is kind of like a trader as well, where their mindset is like, we don't even think about where to open up our shops. We just roughly guess like every 2 to 3 kilometers in the whole country, we're opening up a shop. We're not even going to think about it because thinking about it is opportunity cost. We've got to open up every 2 to 3 Ks. And then the bottom 10 to 20% of stores that aren't performing well, we're just going to shut them down. That's their mindsets. They think like that. Again, remember, Chinese, they think completely different. And I'm like, shit, man, thinking of understanding how they think, man, I've learned some things. I really learned some things. Scary. You got to have a lot of capital back you up to pull this off. But I get it. I get it. And I'm like, I think there's actually a strong argument for it. It makes me think, why is there not more people with this mindset, actually? It's very rare to see these someone out of especially in Australia, a place like Australia with this mindset. I've never come across it. I've never come across it. So what happened with Luckin Coffee was the stock price was absolutely pumping after IPO. Eventually they found out, all right, their accounting was wrong. The way the news interpreted it, especially the Western news, was it was like a fraud and they did it on purpose to steal investor capital. I don't know if they will do that on purpose, to be honest. I don't know if they'll do this on purpose. I'm like, if you're just growing that fast, like, all right, you might have some major, major inaccuracies. But when you're investing in a Chinese company, right, you got to understand that, maybe when it comes to this stuff, it's not as clean as the US, right? And the stock price, let's bring it up. So here's the Mixue stock price. It's only been 2 weeks. Stock price holding up nice and strong. Market cap's probably 13 to 15 billion right now. But anyway, let's go to Luckin. Luckin Coffee, okay? I kind of ruined it for you. Kind of giving away the surprise. I should have been more prepared, actually. Let's go back. Just, I don't know. Hopefully you didn't see that. But it was like this, okay? I'm not sure if this is even the right chart, is it? Yeah, it might be. So it went from like $15 and it pumped to $51. That's a big move. From like even lower. It was like 13 to 51. I'm not sure if this is the most accurate chart. There might have been a chart which has more information. Maybe not. I'm not sure. But that's a big move from high to low. Let's measure it. In just like what, 1 year, that is up 270%. Big move, right? Big move from high to low, 270%. Then you can kind of see where the negative news came out. Boom. You fell off a cliff. You went from $51 down all the way down here. And I thought, like, silly me, like, I only, like, this is one of my biggest regrets when it comes to investing stuff. Major, like, and like, if you're one of the crypto guys and you're trying to get rich quick, like, this was actually an opportunity to get rich really, 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 really quick, really quick. I just like I studied it because I was in the hospitality space and I'm trying to look out for like these investments and all of that. And I already learned about luck and coffee and understand what they're doing. Then when all the negative news came out, I just believed it. I'm just like, dude, they're fraudsters. This is gonna get delisted from the stock market. It's done. They stole investor capital. It's over. I never looked at it again. I never looked at it. I only read the headlines, man. It went down to 95 cents. 95 cents. Brother, it was overblown, brother. Shit. Even if the accounting is off by 25%, should the market crash by, what, 99%? If the accounting is off by 50%, should the market crash by 99%? If the accounting is off by 90%, should the market crash by 99%? Get where I'm coming? I don't know what the accounting should have been. Right? I didn't read it. I couldn't even, even if I tried, I couldn't count it. Right? I'm not an accountant. You'd need a team of accountants for this type of stuff anyway. Right? Thing is, even if the accounting is wrong, it doesn't mean it's worthless. There's value there. There's value there. It's not like a complete fraud, like where there's what's that? What is that? That blood spinning startup company, was it Theranos or whatever it's called? They was that in their heads they thought that they had some technology that was going to change the world, and it turned out the whole thing was a lie. It's not that. These are coffee shops. They got lots of them, right? Maybe they counted the numbers a little bit wrong. All right, they made some errors, some rookie errors. Of course, you made some rookie errors. How fast are you growing? It's never been done before. The growth rate, we've never seen anything like this before. It was the fastest of all time. It's like Larkin and Mixue. These are the only two guys doing this stuff. Now look at the stock price, man. It's already back. It's $35. It's consolidating under 40. If this thing breaks out of 40, you go again, man. You go again. If you'd bought in, this is June 2020. If you bought in until now, you're up 3,500%. There's needles in the haystacks. It is possible to outperform the S&P 500 if you know where to look. All right, and maybe you need a little bit of luck on your side. All right, to find luck and coffee at the bottom. 3,500%. So, obviously, Mixue, they've got this as an example so they can learn from it. All right, they can learn from it. Now, if it does happen again, it kind of makes sense because they're cousins. Mixue and Luckin, they're cousins, in my opinion. One's tea, one's coffee. Okay? If it happens to Mixue, I ain't believing. I ain't believing the headlines. I'm going to do my job as an investor and look into it more and to find out where the true value lies. If the price crashes by 99%, there's not a chance that, like imagine Mixer is worth 13 to 15 billion right now. If it crashes by 99%, it doesn't make any sense. I'm buying the dip, brother. I'm buying the dip. And, like made the video about going long China now with Tencent and Alibaba and BYD. The biggest position is like Tencent, 9.45%. If the market of Mixue crashes by 99%, I guarantee you I'm loading on more than 10%. I'm making it a much larger position than 10 cents. All right. Um, so yeah, I don't know. I got the alarm ready. I'm looking at Luckin. This is what investors do. You get prepared. The story that I told you just then, all right? In summary, the story that I've told you, you find that story anywhere else on the internet. You find that? That's some proper knowledge, brother. That's some good shit, bro. That's some actual top quality analysis, right? That's some proper. I don't want to come off as arrogant, but that's some proper high level shit. Um, right. And if you can't see it, you got a little bit of work to do. But this is like combining. You can see this is in my field. It's combining stock market, it's combining hospitality, and it's combining Asia. I understand these three pretty damn well. Um, that's my job. Founder of Headstart Capital. That's what I do. Anyway, guys, that's pretty much, the lesson for today. Get ready. Get ready. Think about the scenarios where everything goes well, but don't stay there too long. There's no benefit to that. And then go to the bad side. Think about all the negatives. Then you kind of, if you do that, that's great. I think that's the right mindset. You want to mainly focus on the negatives. And then every now and then, I think it was Warren Buffett or Charlie Munger, they say, with that mindset, you eventually turn out you don't get your expectations too high. You understand all these things. You can lose money. You can always be wrong. But then you realize, oh shit, I've actually chosen a lot of great investments. And they will pleasantly surprise you again and again and again and again. Because if you've accurately drawn in the scale, here is the good stuff, here is the bad stuff. You've drawn in the scale. You've looked at where from the midpoint, right? This is a normal investment, up until where the positives can go. And then you don't stay here. Most investors, they stay here, right? And they look at the bull case. You go and you spend most of your time studying how bad it can be, right? Study how I can lose my money, because you never want to risk, you don't never want to lose your money. The game is like to stay alive. You spend most of your time out this side, right? And it's like you trick your brain. You're like, oh shit, I've thought about these negative scenarios so much and I'm comfortable with them. But you kind of convince your brain like the negative things are going to come true. So then you have to kind of convince yourself, hey, no, I'm invested in this thing because of the positives. It's a really weird thing. And so what actually happens is like, because you've chosen actual really great investments, you just get positive surprises. Like you get pleasantly surprised all the time. Great investments will pleasantly surprise you. That's what they're supposed to do. That's actually a green flag of a great investment. If you get caught off guard with your investments and you get negatively surprised, you probably didn't do the work here over on the left. You probably just had the bull goggles on the right, and you were just focusing on how I can make money. You weren't focusing on how I can lose money. That's more important. Focus on the negatives first. All right, guys. So many lessons in this one, which has been an absolute ripper, an absolute pleasure. I'll see you in the next one. Let's go, boys and girls.